Hi, I'm Jim Jubak and welcome to my YouTube video for July 28th. I'm wearing my Oslo Viking Ship Museum t-shirt today. This is not to be regarded as an endorsement for any team in the Summer Olympics in Tokyo. If you want more stuff of mine, 3 portfolios, you can go to my free site, that's jubakpicks.com. If you want 6 portfolios and even more stuff, more picks, you can go to my paid site, that's jubakam.com. You'll see the links down below. Today we're going to talk about China, and the key concept for China right now for investors is China Un-Investable. Now, you've probably been following all of the news about the crackdown on internet companies and yada, 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 yada. My initial take was that we were seeing the Chinese government decide that it really wanted to make sure that people like Jack Ma, the founder of Alibaba, didn't step too far out of line. The government came down pretty hard on Alibaba with a big fine, and then it spread to other internet companies. So that Tencent, where the CEO is Pony Ma, no relation to Jack Ma, is a whole lot more supple in terms of his relationship with the government, but even they were not able to escape. And the key question seemed to be about who controls the data that these companies collect, like Amazon does here. You know, if you order something through them, they know who you are, they know what you ordered. They collect all that data. The government was arguing, hey, there's this national security issue here. This data doesn't belong to the company, it instead belongs to the state. Huge business issue if you're trying to value these companies, because this is well, probably their major asset is all this information on subscribers. We then moved from there to a company called DD Global, China's largest ride-sharing app. And even there, the government seemed to, there seemed to be a clear issue that DiDi had gone public in the United States, and it wasn't clear that the government really approved of the offer, and there was a big pushback. The company had its apps removed from app stores. Big deal, again, if you're a ride-sharing company, you can't do that. Okay, so it still looked like what we're talking about here was an issue of government trying to exercise control over the internet sector, but we didn't stop there. The next stop was a company, China's largest food delivery company, Meituan. Basically what the government stepped in and says, hey, you're in violation of antitrust rules because you're requiring restaurants to sign exclusive contracts. The company's been under antitrust investigation for a while, so this wasn't an incredible surprise. The government also said, hey, we need to guarantee that your workers are making minimum wage and that you're treating them well. This was somewhat surprising because of the timing. It's not that people didn't know that the delivery workers at Meituan weren't making minimum wage, but it was like, well, why suddenly now? So that started to make me think, well, maybe there's something going on here that's beyond simply the desire to exercise control over the internet sector and to sort of pound down these internet entrepreneurs. The next step, an announcement of increased regulation in the private education sector. These are companies that offer private tutoring, online education courses, et cetera, et cetera. And what the government said is, hey, you should all be nonprofits. And you should not do pop-up ads. Some of these companies are owned by Tencent and others so that they sell ads to themselves, basically, and that promotes more business. You should not be doing this on weekends. And in fact, we're not sure that you should be able to be a publicly listed company at all. And it's at that point where I think I started to realize that, hey, maybe there's really no bottom here. The real issue here is whether these companies, as it seems, are going to be either forced to delist, unable to list, period. There's a couple quotes I found interesting from the analysts at JP Morgan, and one of them is, this makes these stocks virtually uninvestable. If you don't know that a company is going to continue to be able to be listed, you have no idea what its costs are going to be, you have no idea what its profit margins are. Indeed, you don't even know, in the case of some of these companies, what their business is going to be able to be. It's very hard to say, hey, if they drop 20%, they're a buy. Well, if they drop 20%, under normal circumstances, yes. They drop 20% and you don't know whether they're going to be delisted or, in the case of a delivery company like Meituan, told that they have to change their entire business model and maybe go from a profit to a loss, it does make it very hard to figure out where the bottom is. One of the things that they have said, that the JP Morgan people said, is that they're not sure, and they're talking, I think, largely about the private education companies, saying, we're not sure they can even stay listed. If you watch what's happened to a company that gets delisted, the stock trading drops, the price drops, etc. So we're trying to figure out exactly what's going on with these. Okay, this is a year-to-date chart for DD Global, the ride-sharing app. You'll notice way back here in early July, they were up near 16, went public, and then began to plunge like a stone. We're now at 9, so 16 to 9 in a few days. There's been one of the reasons for doing this video today is there's been a bounce today. So, you know, you're not talking about a huge bounce, but you're talking about going from 8 to 9. So that's 10%, something like that. So maybe this is a chance to sell and recoup some of your losses. This is Meituan, the big food delivery company. You see this stock has been in a downward kind of trend as this news is broken and then plunged. Again, you see a big bounce today, again, raising the question of whether this is a time to do this. These two companies, I think, are small enough so that small enough in their role in the Chinese economy so that I think the government is going to continue pressure on them. So I would, if I were selling to get out of this market, I would certainly think about those two. This is Tencent Holding. Again, a big drop for all the year and then a bounce today, but you know, we're talking about $59 a share. From back in February, we're at 98, huge downturn. One of the things that concerns me about Tencent Holding is that a lot of their business model is built around buying shares, financing new companies. So they own a big hunk of Didi, they own some of Meituan. So they've got a big portfolio of companies, about billions of dollars worth of startups that are in their portfolio. So part of the value of the stock is the ability of this of Tencent to take those companies public, and that's one of the things that's in question right now. The last one, of course, is the big Megillah of the Chinese economy, the Chinese internet economy, which is Alibaba. You see that Baba, as I love to call it, is down from 270 in February to somewhere around 186, so 100 bucks a share in that period. I don't own all of these in my online portfolios, but I do own Alibaba, I do own Tencent, and I do own Meituan. What my thought is right now is that maybe it's worth holding on to Tencent and Alibaba, although you are talking about trying to hold on to a stock where you can't calculate what its fair value should be, and that makes it really hard. So I understand if you want to sell. I'm going to think about it for the next couple of days, maybe see whether the bounce continues. I think sort of Meituan, which at one point I was up 225%, I think I'm now up like 80%. I think I'm probably going to sell that one out of the volatility portfolio very quickly, and I wouldn't be buying shares here looking for some kind of bounce off the bottom, because I think what we're looking at is basically an ideologically driven set of decisions, not a business set of decisions. And since we don't know, Xi Jinping doesn't call me up at night and say, hey, this is what I'm thinking about what the ideology of the Communist Party should be vis-a-vis the private sector. It's very hard to tell where they're going. This looks like another step in the regime's rollback of the opening of the economy to private sector, and that's not good news for any private sector stock. This is Jim Jubak. Thanks for listening to my YouTube video today. If you liked it, like us, subscribe. My free site is jubakpicks.com, 3 portfolios there, including a long-term portfolio that holds both Alibaba and Tencent, and then my paid site, jubakam.com, which has 6 portfolios, including a portfolio for millennial investors or any investor who indeed has more time than money. Okay, thanks, and see you next week.